Okay, let's dive into Tesla. It feels like a company that really keeps you on your toes.
It certainly does.
We're seeing their stock price nudge upwards recently, which is, a bit of a positive blip.
Yeah, a little bit.
But it's set against, well, a backdrop of some pretty significant challenges.
Definitely. So that's what we're zeroing in on in this deep dive, right?
Yeah.
Tesla's trajectory through 2025.
Exactly. We'll be dissecting their current market footing, the competitive landscape they're navigating.
And their future prospects.
Yeah.
We're pulling from that recent report, Tesla's turbulent trajectory in 2025.
Right. And the aim here is really to give you, our listener, a clear, sharp understanding of the core factors influencing Tesla right now.
Without getting totally bogged down in, endless data points.
Let's try, anyway.
So what's immediately striking is that tension, like you said, between the recent stock movement and the bigger picture.
Mm-hmm.
The stock's currently around, $333.93, showing a nearly 5% increase recently.
Yeah, which could signal some maybe renewed optimism.
Maybe. But then you zoom out, and that gain is, well, it's within a context of a 17% decline since the start of the year.
Right. That contrast right there tells you a lot about the volatility, doesn't it? And the constant reassessment of Tesla's value.
Absolutely. That recent uptick is just one piece of a much, much larger puzzle.
And when you dig into their first quarter financials for 2025, the complexity really comes into focus.
Yeah, the numbers were pretty stark.
A steep 71% drop in net income.
71%.
Plus, vehicle deliveries were down by 13%.
Which the report noted is the most significant decrease they've seen since mid-2022.
That's a considerable shift, a really big deal.
It is, and it naturally leads to the question, what are the key drivers behind this downturn?
Right.
And a significant part of the answer seems to be the rapidly intensifying competition in the EV market.
Yeah, Tesla isn't operating in a vacuum anymore, are they?
No, definitely not. The report highlights BYD as a prime example.
Okay.
In Q1, they sold over 1 million vehicles.
Over 1 million. Compared to Tesla's. What was it?
Tesla's 336,681, so nearly triple.
Wow. And, okay, this next point is huge. BYD actually surpassed Tesla in net income for the first time.
Yeah, that's a really significant milestone.
So what's behind that? What are the underlying factors driving this shift?
That's a crucial question. It suggests a combination of things. BYD has a really strong presence in China, which is obviously key.
Mm-hmm.
They also have a broader product portfolio, including more affordable models,
Right, hitting different price points.
Exactly. And their vertically integrated supply chain might give them some cost advantages too.
Okay.
So this milestone, it indicates a fundamental change in the competitive dynamics. It suggests Tesla can't just rely on its brand strength and, tech lead anymore to guarantee financial superiority.
So it's not just a global picture then. The report also breaks down some key regional differences, right?
Yes, Europe is a key example.
Tesla saw a substantial 38% drop in sales there.
38%. That's big.
But what's really interesting is that Volkswagen actually overtook them as the top EV seller in Europe.
Yeah, and VW sales jumped by an impressive 157%.
Whoa. Okay, what's behind that kind of dramatic shift in Europe?
Well, the European market has its own unique set of, let's say, challenges and opportunities.
Right.
Volkswagen's success probably reflects several factors. They have a strong existing dealer network, for one.
That makes sense.
A wider range of EV models catering to different segments, perhaps a better alignment with European consumer tastes.
Okay.
Plus, government incentives and regulations in some European countries might favor locally produced vehicles.
So it suggests Tesla faces a much tougher battle for market share in these established automotive markets.
Definitely. It's not the open field it once was.
Okay, so while they're navigating this increasingly competitive landscape, Tesla is also pushing forward with some really ambitious plans.
Right.
The driverless taxi service, the robotaxi, slated to launch in Austin, Texas next month. That's a pretty bold move.
It is ambitious, yeah. And it also brings a significant layer of regulatory scrutiny.
Naturally.
The National Highway Traffic Safety Administration, NHTSA, they've specifically requested detailed safety plans from Tesla.
Right, about how these driverless taxis will operate safely, particularly in, tricky conditions, fog and rain.
Exactly.
Right.
Which highlights just how critical it is to ensure the reliability and safety of this autonomous tech in, All real-world scenarios, not just perfect weather.
Right. And it seems there's still some debate about just how ready Tesla's full self-driving, the FSD software, actually is.
Yeah, that's a big question mark.
The report mentions that while 94% of FSD drives proceed without critical disengagement,
Which sounds pretty good on the surface.
but that remaining 6% where human intervention is needed, well, that still raises questions, doesn't it? About the true level of autonomy and its dependability.
That 6% requiring human intervention is, yeah, it's a key point. Because
Yeah.
while 94% success sounds high
Hmm.
in the context of autonomous driving, even a small percentage of failures, especially ones needing a human to jump in to prevent an accident, well, that raises significant safety concerns.
And could impact public trust, regulatory approval.
Absolutely. It suggests that while the tech is advancing, it might not yet be robust enough for truly widespread, unsupervised operation. Not in all conditions, anyway.
This inherent uncertainty, it probably contributes to the really wide range we're seeing in analyst predictions for Tesla stock. It's quite a spread.
It really is.
Yeah.
You look at TradingView's average 12-month prediction, it's way up there at $2,379.31,
Hugely bullish.
which would be a massive increase from where it is now.
Massive. But then on the other hand, Tip Ranks has a much more conservative estimate, closer to $340.50.
Wow, that's a huge gulf between predictions.
It really underscores the uncertainty surrounding Tesla's future, doesn't it?
And then you have the really optimistic view, like Kathy Wood at ARK Invest. She's forecasting a potential surge all the way to $2,600.
Yeah, ARG is famously bullish on Tesla. And the rationale in the report points to their belief in Tesla's, leading edge advancements in AI and, of course, autonomous driving tech.
Right. So you have these very different outlooks depending on how much weight you give to that future potential versus the current realities and challenges.
Exactly. Which brings us back to the more immediate headwinds Tesla is facing.
Right. The report clearly outlines multiple challenges beyond just competition and regulation.
Like the declining sales in key markets we mentioned, that's a significant concern.
Definitely. And the report also notes that CEO Elon Musk's political activities are causing some unease among certain investors.
Yeah, it mentions a Pennsylvania pension fund, for example, has reportedly halted new investments in Tesla because of those concerns.
Which shows a tangible impact on investor sentiment. It's not just noise.
And furthermore, we can't ignore the ongoing issues related to their autopilot system. Things like phantom braking.
Right, and other reported problems.
These have definitely attracted attention from regulators, led to lawsuits.
Which, can't be good for Tesla's reputation for safety and reliability. It chips away at that.
So when we sort of synthesize all of this, we see a company at a really fascinating crossroads.
Definitely. Tesla possesses, a powerful brand, and they continue to innovate, particularly in areas like autonomous driving and AI. No doubt about that.
But
they are encountering significant and growing challenges. Increased competition eating into their market share.
sales declines in crucial regions.
Heightened regulatory scrutiny. Coupled with these investor concerns about, broader company factors.
It leaves you with a really interesting question to consider, doesn't it? Given all these powerful and often opposing forces, what will ultimately determine Tesla's path forward?
Yeah, it's the billion-dollar question or maybe trillion-dollar question.
Will their technological innovations, especially in AI and autonomous driving, prove to be the key? The thing that unlocks future dominance and lets them overcome these mounting competitive pressures and the increasing regulator attention.
Or will those hurdles prove too high? And what role will public acceptance and, trust in these ambitious projects like the robotaxi service ultimately play in shaping their long-term success?
Lots to think about there. Definitely a space to watch.